Hello, welcome to Grow Money Talk. Today we have Mr. Abhishek Singhal, Head Products of Aditya Birla Sun Life Mutual Fund. We had an important event yesterday. RBI in its monetary policy has cut the repo rate. There are certain questions for Mr. Abhishek Singhal. First of all, what does this mean to the investors and how will it affect debt fund investors and equity fund investors?
Hello. So repo rate basically is the threshold rate or the reference rate for the Indian economy that is set by the Monetary Policy Committee of the RBI. A reduction in this rate positively impacts the debt markets. Typically bonds will rally, and on the equity front, financials or NBFCs which typically borrow or whose business is dependent on borrowing will rally. This move is essentially targeted at bringing down interest rates in the economy so that the expected slowdown or the slowdown that we are all concerned about can be addressed and there can be some stimulus to the economy.
Which category or subcategory of mutual fund will benefit the most from this rate cut?
Well, the most obvious choice of funds to benefit out of this are debt funds, and most typically more government oriented, more government securities oriented or longer term bond oriented debt funds. However, from an advisory point of view, because some bit of transmission of interest rate cuts over the last 3 or 4 instances has already happened, and we believe that there is a possibility of further rate cuts, we would advise investors to be in the short to medium term part of the debt curve. From an equity standpoint, we would advise investors, given the slight bit of growth slowdown and given some bit of lack of economic activity at this point in time and some bit of headwinds from global macro, on the equity side, to be more focused on SIPs from a long-term perspective.
How much of difference does it make for people paying EMIs?
Well, it's good news for people paying EMIs as well as for people who are actually looking at going for loans at this point in time. Because as I said earlier, the move to cut interest rates or to cut the reference rate like a repo rate is to cut down the threshold borrowing rates in the country. It is likely to have a direct impact on housing loans, on auto loans, and any other sort of personal loans that you are probably trying to look at.
Do you think there is a slowdown? Many in the industry think we are in a slowdown. Will this rate cut be enough to stimulate the markets?
Well, there is a significant amount of economic slowdown elsewhere in the world, and India has happened to be an oasis of growth all this while. However, RBI in its policy has also observed some bit of a slowdown in the economy, with the growth estimate for FY20 being brought down from 7% to about 6.9% now. Additionally, high frequency indicators like auto sales, housing sales, travel numbers, etc. have all been indicating at a significant slowdown in the consumption side of the economy as well. This move to cut interest rates is welcome, as this would kind of improve the liquidity situation in the market as well as provide some bit of a stimulus to industries looking at some bit of investment. If that were to happen, this would definitely be a welcome step and some bit of addressing the growth concern. Will it go very far? Well, we expect the government and the RBI to be very, very focused and data driven in that respect.
We ask this question nearly to everyone and we will repeat. What do you have to say to long-term investors in light of this rate cut?
Well, for long-term investors, never better a time to invest than present, and hence for long-term investors my advice remains the same. Be focused on your SIPs. In fact, this is a time to improve your contribution towards your savings, especially financial savings in terms of SIPs, in terms of equities. For short-term investors or your short-term savings, you should consider short-term funds or ultra-liquid funds like low-duration funds. ABSL low-duration fund, ABSL corporate bond fund are ideal funds to look at. In addition, you should look at diversified equity funds for your SIPs. Well, from a long-term perspective, SIP in an equity fund or lump sum investments going into an equity fund through an STP route are the best recommended options.
Thank you, Abhishek. It was indeed a great thought about the rate cut.